Do you believe that one of the hottest stocks right now is Tesla stock? If so, which other stocks do you think billionaire Ron Barron thinks are worth investing in? You should not pass up this opportunity because Barron is well known for his years of investment experience. According to Elon Musk, individuals with long-termism, an optimistic outlook, and a long-term perspective are the ones who are most likely to succeed. According to him, what you really need is people who have infinite time horizons, not tomorrow, not next quarter, infinite time horizons, according to Ron Barron. American mutual fund manager and investor Ronald Stephen Barron, better known by his stage name Ron Barron, founded Barron Capital, an asset management company that specializes in providing growth equity investing solutions. With 52 years of research experience, Ron formed Barron Capital in 1982. Barron Growth, the $10 billion flagship fund of the buy and hold investor, with an annual turnover of less than 3%. Ron Barron now has a $4.2 billion net worth. In the midst of the market's recovery from June's lows, Barron Capital CEO Ron Barron recently appeared on CNBC's Squawk Box to discuss possible investing options. Barron stated to CNBC in the interview that we're investing in growth companies, so the growth companies are our hedge against inflation. In the aforementioned interview, Barron disclosed the stocks they often purchase, naming Tesla, SpaceX, and FIGS, dubbed the Lululemon of healthcare, among others. Ron Barron still owned almost half of Barron Partners in Tesla as of early August. However, the fund's longer-term track record is strong with or without its Tesla holding. On April 30, 2003, Barron Partners, which had started out as a private partnership, changed its status to public mutual fund. The fund generated an astounding 17.93% annualized return from that point to the end of July 2022, compared to 11.6% for the Russell 1000 Growth Index and 10.3% for the S&P 500. In the pre-Tesla and post-Tesla eras, the fund comfortably outperformed the index. In the first quarter of 2014, Barron made his first Tesla purchase. As of July 2022, the fund has generated a 21.9% annualized return from the start of that year, compared to a 14.46% annualized return for the Russell 1000 Growth Index. But the fund's 14.78% annualized return from launch to the end of 2013, when it did not own any Tesla, it comfortably beat the 9.34% annualized return of the Russell 1000 Growth Index. Prior to Tesla's initial appearance in the fund, its top assets included Hyatt Hotels, energy infrastructure company ITC Assets, and specialty insurer Arch Capital. In addition, the fund had two private holdings, Windy City Investment Holdings and the private equity firm Carlyle Group, as well as Charles Schwab, FactSet Research, and Vail Resorts. Charles Schwab and Arch Capital are the two equities that the fund still holds since its initial public offering. Since the fund's founding to the end of July, those stocks have returned 12.95% and 13.53%, respectively, on an annualized basis. Additionally, from the first quarter of 2008, the fund has owned Vail. Vail has returned 12.28% on an annualized basis since the beginning of that year through July 2022, outpacing the returns of the S&P 500 and the Russell 1000 Growth Index, which are 11.36% and 9.37%, respectively. Prior to purchasing Tesla, which quickly rose to become Barron Partners' top stake, the fund's highest holding on December 31, 2013, was a 10.02% allocation to Arch Capital. The fund, which usually owns 30 stocks, has previously had double-digit positions. For instance, ChoicePoint had an allocation of 18.57% at the end of 2013 and Vail Resorts had 14.91%. However, none have come close to what Tesla is currently allotted. According to Ron Barron, Tesla should be able to build 20 million vehicles within 10 years. The company currently produces about 1 million automobiles, while the top two automakers in terms of delivered cars, Volkswagen and Toyota, jointly produced less than 20 million cars in 2021. However, Barron and Tesla's story doesn't end there. Barron has high hopes for SpaceX, another business under Elon Musk's leadership. Billionaire Ron Barron recently put $100 million into SpaceX in late August, and he believes that in the next 10 years, his Tesla holdings will increase 3 to 5 times. According to CNBC, the founder and CEO of investment management company Barron Capital also contributed roughly $100 million to Feige's, dubbed the Lululemon of healthcare. His largest recent investments have been in SpaceX and Fakes, a manufacturer of medical scrubs, over the past several months. Barron has taken part in earlier fundraising campaigns for SpaceX. In the meantime, SpaceX and T-Mobile recently revealed a collaborative venture on Twitter with the goal of boosting connection. In addition, Barron disclosed that he has purchased shares in Red Rock Resorts, Vail Resorts, and Hyatt, demonstrating his optimism over the travel industry. A well-known Tesla supporter, he calculated that, after making his original $380 million investment in 2014, he has gained between $6 and $7 billion in shares of the EV manufacturer. In the next 10 years, he continued, he expects his fund to make 3 to 5 times its initial investment in Tesla. In the next 10 years, I think that Tesla is going to be the largest company in the world, and in the 10 years after that, I think it will be challenged by SpaceX, he stated. All things considered, Ron Barron has been purchasing shares in Elon Musk's Tesla and SpaceX, which produces medical scrubs called Feige's, as well as tourism companies Hyatt, Vail Resorts, and Red Rock Resorts. A few months ago, during an interview, Barron was questioned about his criteria, as he is a master of growth investment, which entails, among other things, identifying businesses with the potential for faster than average profit growth. Everyone can comprehend what a growth firm is, he claimed, but most people find it difficult to grasp competitive advantage, which is what matters most. There is no algorithm that can determine that. You have to know how a business functions and what makes it hard for competitors to compete, advises Barron. Barron gave Tesla as an illustration. He claimed that Tesla's culture of quick innovation gives it a competitive edge. A 10-year lead time on batteries and electric vehicles is held by Tesla. An entire industry has been changed by it. Instead of basing our investment decisions on a company's current value, we consider its potential growth over the next 5 or 10 years. We have aimed to increase our funds by double every 5 or 6 years. We have achieved this by making long-term investments in companies that we think have a competitive advantage and are run by remarkable individuals. Our concerns are with businesses, not with stocks and stock exchanges. When asked if he ever hangs onto stocks that underperform for a few years, Barron responded in the affirmative. He clarified that this frequently occurs, citing Tesla as one example. For instance, he disclosed that from 2014 to 2016, his company spent $380 million on Tesla. Even though they thought they could make 20 times their money in 10 years, they thought it was a hazardous investment at the time. As a result, they held less than 2% of the stock in their company. He said that the highly regulated, capital-intensive nature of the auto industry made it risky, and that few people believed Elon Musk's electric car company would succeed due to the opposition of powerful, well-funded automakers, their dealers, unions, hedge funds, and politicians. Tesla's sales quadrupled during the next 5 or 6 years, yet despite its high volatility, its share price barely moved over that time. We were correct, and Tesla's sales have kept rising sharply. Tesla's share price climbed almost 20 times between 2000 and 2019 to 2021, yielding an approximate profit of $7 billion on our initial investment. Over the next 10 years, we hope to make at least 3 to 5 times our money again, Barron stated. Barron Capital CEO Ron Barron stated that he intends to retain Tesla stock for a minimum of 8 more years during a CNBC Squawk Box episode. I think we're going to make 3, 4, 5 times our money on Tesla from here, Barron stated. According to the aforementioned interview, billionaire investor Ron Barron anticipates that the shares of Tesla will continue to soar for the next 10 years. His fund has already made $6 billion on its initial investment in the company. According to Barron, he put $380 million into Tesla between 2014 and 2016 at an average price of about $40 per share. As a result, he has received a return on his investment of roughly 20 times or $6 billion to date. To diversify the portfolio, Barron has sold almost $1 billion worth of stock in the two mutual funds that own it.